Ashwini, ask everyone to join, please. Good morning, everyone.
Good morning, sir.
Yeah, just ask everyone to join the class, please. It is as per timetable, it's my class. Please be quick. Okay, so we'll start. Fine. So yesterday we were discussing about the word setup. What do you mean by the word setup as far as income tax is concerned, right? And this is what we had yesterday, just introduced to the concept of setup. So what do you mean by the word setup as far as manufacturing concern is basically the installation of plant and machinery. If this happens, then we can say that, then we can say that the machinery or the manufacturing plant has been established. Obtaining of license, power connection, and completion of trials. When this process is done, it is considered that any manufacturing unit is has been set up. Any manufacturing unit has been set up. So this is the meaning of it. When it comes to trading, you need to have an office, you need to have a warehouse, and you need to purchase the goods. So moment you have all this, we can consider that you have done the setup for a trading company. Okay, next, if you are a manufacturer plus trader, the day of commencement of trading activity, irrespective of whether you manufacture or not, that is not important. The day you start trading, okay, from that day we can consider that you have set up the business. In case of a hotel or in case of a leasing business, okay, the property required which is ready to be let, the moment the property is ready to be let, that day, okay, if even if you don't let it down, no problem, but the day the property is ready to be let out on rental basis or on lease basis, that is what we call as setup. Okay, and last one is for consultancy services and software services, the day you recruit people, the day you recruit people, the day you have evidence of a client, that means you get a work order, from that day onwards we can consider that you have set up a consultancy business. So this is how the word setup has been defined for different types of businesses. Okay, why is this important? Because if you don't know when is the setup, if you don't know when is the setup, you will definitely know don't know when to consider the previous year. So to ascertain the previous year, it is very important for us to ascertain when the setup has happened. That is the reason we have to understand the word setup. Next, once you set up the business starts operational. There are some expenditures which you have to incur in order to run your business. It could be some overheads, it could be taxes, it could be legal fees, it could be obligatory or statutory fees. All these things are nothing but these are expenses which are required. These are expenses which are required to run the business. If you don't incur these expense if you don't incur these expense, your business will not run. Your business will not run if you don't incur this business. And in order to run your business, these expenditures are mandatory. And if these expenditures are mandatory, okay, accordingly certain provisions are given to them, certain deductions are allowed as far as P&L account is concerned when it comes to computation of tax, right? So what are those expenses or what are those aspects which are required to run the day to day affairs of the business is what we have to understand. Now, when it comes to, there are some specific deductions which have been mentioned under section 30 to 37. And what do they include? Some of the business premises could be on a rental basis. So rent is a fixed obligation for them. It is a business expenditure. There are certain rates and taxes that are mandatory. Certain repairs do come into picture whenever you have machinery, whenever you have any equipment that is going to be worked for the purpose of business. There are some mandatory expenditures in terms of repairs that are going to arise, and that have to be, those are related to the business, which you have to incur cost, which for which a cost has been incurred. And of course there is insurance that is related to business. Okay, insurance related to business. Say for example, you might have a fire policy, fire insurance policy. If you are a trader, if you have a shop, you might have something called as shopkeepers policy, right? Then you may have a stock, okay, which is highly flammable, something like cotton. Say something like, if you are storing some chemicals, these chemicals, you are a dealer in a particular type of chemicals. These chemicals are highly flammable. In such case, it is necessary that you have stock insurance. In such case, you need to have stock insurance. So any insurance that is related to business is a allowable business expenditure, right? Now, what are those? It could be in terms of land revenue taxes, insurance premium, cost of repairs, and other things that have to be taken into consideration to see to it that your business runs. Apart from that, you have repairs and maintenance of the entire plant. Okay, for the entire plant and machinery, okay, you might have you have to incur certain expenses. There might be your current routine maintenance. If you see, all companies, all manufacturing companies, in 1 year they take a holiday for mandatory 7 days. They take a holiday for 7 days. What do they do in this? They do the AMC, annual maintenance contract. AMC stands for annual maintenance contract. So they give a contract to a company who will do the entire servicing of the entire plant and machinery, right? So for that thing, they have to repair something, they have to replace some parts. These are expenses which are related to the business, and that's for they are allowable business deductions. Next is insurance related to plant and machinery, rent in case of any plant or any machinery that has been leased out or that has been rented out. So these expenses are related to business. They are, therefore, they are called as permissible deductions. Next important aspect is, so just look at this. This is section 30 that talks about statutory fees. Section 31 talks about the entire plant and machinery. And whenever you have a plant and machinery, you will definitely have depreciation. So depreciation is mentioned under section 32, right? So in order to claim an expenditure of depreciation in your P&L account, there are certain conditions. And the conditions are, the asset must be owned by the assessee, right? The asset must be owned by the assessee. It must be used for the business purpose only, and that too in the previous year. That is very important. It has to be used only for business purpose, and it has to be used only for previous year. I will give you an example. Many people today, if you observe, many people today, even in Belgaum or any other place that you see, they are owners of a company. They take a car on company's name. So there is a car. I'll give you an example. There is a Skoda car. There's a Skoda car that has been taken. The the car is on company's name, okay, but the managing director of the company only uses it. Nobody else uses it. So on the other hand, if you observe, the car is on business on the company's name, but it is being used by the individual for his personal use. It is used by the managing director of the company for his personal use. Then that particular car is supposed to have petrol expenditure or diesel expenditure. It's supposed to have repairs. It is supposed to have insurance. It is supposed to have some maintenance. Okay, there might be a driver. So all these things are related to the car, right? And this car is specifically used only by one person for his personal use. And if the car is used for personal use, he cannot show these expenditures in his business purpose. Please understand that. So it is very important for you to understand that the asset is owned by the assessee. If the asset is not owned by the assessee, then you are not liable to tax that particular person. Are you able to understand? So it is very important to understand that the asset should be owned by the assessee. That is the reason I mentioned this point first. Next, that particular expenditure must be for specific business purpose only. If it is used for personal reasons, I am not eligible to show it as an expenditure in my P&L account. Please try to understand. Any expenditure that is incurred on personal nature should not be debited to P&L account. And if it is being debited to P&L account, that expenditure has to be removed out. Clear? So that is the reason we have to understand second point, which is very important. Third point is depreciation can be claimable for tangible assets as well as intangible assets. So patents, copyrights, trademarks which are related to business come under intangible assets, and tangible assets are all physical assets for which you have a written down value, right? So all these things are mandatory. All these things are related to business, and if it is related exclusively for business, in such case you are eligible to take deductions as far as your tax payment is concerned. When we come to the problem part of it, we'll see it in detail. How do we take the benefit of it? Till this particular point, any doubts? Remember, I told you section 30. I told you section 30 to 37. We have discussed only section 30, 31, 32. We are yet to discuss 33, 34, 35, 36, and 37. Okay, so all these things are is what we have to understand. If there are no doubts, we'll proceed. Next, from your exam point of view, you will get a sure shot question on of 10 marks on depreciation. Please take it from me seriously. You are sure to receive a 10 marks problem on depreciation. Okay, and that's the reason I've taken these topics exclusively. First is, there are two methods of depreciation, as you know. One is a straight line method of depreciation. Second is a written down value method of depreciation. A straight line value method of depreciation is applicable only for power plants business, and for all other business, the it is the written down value method. But there has been an amendment. There has been a change. Now you are the assessee is free to decide to take SML or he can take WDV. Right? There is an amendment. The type of depreciation can be claimed by the assessee depending on what is beneficial to him. That is a change that has happened. Okay, there is a recent amendment that has taken place. Clear? Now, what is that we have to understand? Of course, this is not so important for you because we are not going to discuss only power sector. We have to discuss all other sectors also. But since this is an important clause as far as power sector is concerned, I want you to go through point number 1, 2, and 3. I'll explain to you what is point number 1, 2, 3. Please go through it quickly and I'll explain to you what is it. what you need to understand. There are two methods of depreciation. One is SML and WDV. Any asset, you have to calculate SML, and for any asset, you have to calculate WDV. This is applicable only for power sector. Don't do this exercise for each and every problem that you come across. First, check whether this particular company is related to power sector. If it is related to power sector, only then you have to follow this. Otherwise, there is no need for you to follow this particular procedure, right? So, in case if we get a problem which is on power sector, right? What do we need to do? We need to calculate SML. We need to find out the sale value of the asset, okay, sold by straight line method of depreciation. If this value is lesser than the written down value of the asset, if this value is lesser than the written down value of the asset, then whatever is the difference between these two, whatever is the difference between these two, that will be called as terminal depreciation, and it has to be written off from the books of accounts as short term capital loss. So this is a loss, and loss arises because SML SLM value is less than WDV value. If this is the condition, if this is the condition, then you will have a loss, and that loss is called as terminal depreciation. On the other hand, if you look at point number 2, if straight line method, the value sold by the value of the asset which is sold by SLM method, if this answer is greater than WDV value method of the asset, then whatever income that you get, whatever is the difference amount, that difference amount will be called as profit and gain from business and profession, and it will be treated as short term capital gain. Okay, it will be treated as short term capital gain. Again, it looks confusing, it looks difficult to understand and comprehend, but when we come to problem part of it, which is going to be very short, in the probably in the next slide or next to next slide itself, when we come to the problem part of it, all these 2 points will be cleared. Understand only one thing: for a power sector, if any asset, as far as power sector is concerned, is sold by straight line method of depreciation, and this value is less than written down value method of the asset, then the difference amount between these two, the difference amount between these two is called terminal depreciation, and you will incur a loss, and that loss will be short term capital loss. On the other hand, if it is a power sector, and if you have sold that particular asset of the power sector by straight line method of depreciation, and if this value is greater than written down value method of that particular asset, in such case, whatever excess money that you have or whatever surplus money that you have, that would be called as income from business and profession, and that money will be charged as short term capital gain. Clear? So this is what you have to understand as far as depreciation is concerned. Okay, next, I think you know this. What do you mean by I think you know this. What do you mean by block of assets? We discussed this block of assets when we come to when we had discussed, I think, capital gains. The same concept is going to be applicable here also. Okay, only the section keeps on changing, but the method is same. So first, where yes, Narayan.
Sir, we need to calculate depreciation by both methods, or they will give one value.
No, no. First thing is, uh, look at the sector first. If it is power sector, then it is straight line method. If it is not a power sector, then the rate of depreciation will be mentioned to you. Are you able to
Okay,
get
sir.
Narayan?
Yes, sir.
See,
So,
in the
but there it is mentioned, no, that we have to compare the straight line method answer and then WDV method answer also, sir.
correct, correct. That's the reason whenever a problem arises on power sector, this is not related to this particular slide, please excuse me, but if the business is related to power sector, only then these conditions will come into picture. So first is the depreciation rate. Let us say if it is given to you in the problem as 20%, if it is given to you in the problem as 20%, consider 20%, okay, for this part. For straight line method, there is no need for depreciation rate, because whatever is asset value divided by the number of years, that will be your straight line value method of depreciation. So whenever a problem comes on power sector, what you said, Narayan, they will give you the depreciation rate. Okay, they will give you the depreciation rate 20, 25%, whatever. They will give you the depreciation rate, and they will also ask you to calculate through SLM. Rashmi, this was your point?
Yes, sir.
So only condition is check whether this is related to power sector. If it is related to power sector only, then you have to follow these 2 points. If it is not related to power sector, there is no need to follow this point. Clear?
Yes, sir. So then we have to calculate by both the methods, right, sir?
Only for power sector. That's what I'm saying, Rashmi. Only for
Yeah,
power
that's what, sir.
sector,
Power
calculate
sector.
both the methods.
Yes, sir.
But if it is not power sector, then you don't have to calculate anything. Means you don't have to calculate by this method.
Yes, sir.
Right? Okay. Now, next we have, what do you mean by block of assets? Okay, what are tangible assets and what are intangible assets? The classification is already given to you. Just go through this. Now, we need to find out what is the actual cost of the asset. This is very important. How to find out the actual cost of the asset, right? So this is a procedure that we are going to understand, or this is a procedure that we have to follow. First is, what is the total price of the asset? So when I say total price of the asset, it includes tax. Okay, so that is the price of the asset. If you have availed any subsidies, if you have availed any government benefits, then that amount has to be reduced. Clear? Next, to purchase this particular asset, you might have taken a loan. And naturally, when you take a loan, you are supposed to pay the interest on that particular loan. So any interest that you pay, that for which you have acquired this particular asset, that has to be added. So interest cost gets added. Okay. Next, expenses related to acquiring of the asset. Okay. Freight, insurance, and loading. We call it as EPC. EPC stands for erection, procurement, and commencement. Okay, so there might be some assets. You have to build a foundation. You have to build a foundation for it, and on that particular foundation, that particular machinery sits, or that machinery is installed. So that is what we call as erection. Next is procurement. It might so happen that the electrical panel might come from one company, the bed of the machine may come from one company, the main machine might come from some other company. So you're procuring this machinery from different parts. So when you procure all the parts, that is the time when we say it has the complete procurement process is over. Right? So one is erection, one is second is procurement, third is commissioning or commencement. Commissioning means that service engineer has to come, he will set up the machinery, he will first program the machinery. Okay, he will teach you how to operate that machinery. That is what we call as commissioning of the machine. So it's called as EPC, erection, procurement, and commencing. So all these things also have to be added into the cost of the machine. And finally, any expense incurred in connection with the installation of the asset. That is what I said, EPC. So when you consider EPC, everything comes into picture. So when you add all this, the final answer that you get, this is the actual cost of the asset. This should be considered as actual cost of the asset. Clear? Yeah, any doubts in understanding this part? Why is it necessary to determine the actual cost of the asset? Because if you don't know what is the actual cost of the asset, how will you calculate depreciation? Depreciation is calculated on the actual cost of the asset. So the first mechanism is you need to know how to calculate actual cost of the asset. So this particular section, section 43.1, okay, specifically says, what do you mean by the word actual cost? And what is the mechanism to calculate that? This has been mentioned under section 43.1. Clear? Any doubts in this? Any doubts in this, please?
No, sir.
No, sir.
Now, next part, how do we calculate written down value? Okay, how do we calculate written down value under section? How do we calculate written down value under section 43? 43 subsection 6. Okay, now, of course, this is for the last year that I've made it. I have to just change it. I have to make this 8 and I have to make this 9. Okay, now, how do you calculate? First, find out what is the opening block of the asset forming a part of that particular block as on 1st April 2018. Remember, my previous year is 1st April 2018 to 31st March 2019. This is my previous year. That means what is my assessment year? What is my assessment year? My assessment year is going to be 1/4/2019 to 31st March 2020. This is going to be my assessment year. Are you able to understand? So what is the opening value as on this particular date? I have to find out. In this particular year, have I acquired any asset? If I have acquired any asset, I have to add it. If I have sold any asset, I have to subtract it. And whatever is the asset balance that I have on 31st March 2019, that is going to be the written down value of my asset. Yeah, please note, if any asset is been put to use for less than 180 days in a year, then depreciation allowed is only 50% of the eligible rate. Clear? This part is important for you to understand. Let me give you an example. I have purchased a machinery worth 10 lakh rupees today, and I'm going to use this particular machinery only till 31st March. In other words, my financial year end is going to get over on 31st March 2021. So how many days do I have for financial year 2019 2020 sorry 2020 2021 to get over? I have the entire month of December, I have full January, February and March. All together how many days? Okay, all together how many days? And whatever, 10 days of, you can consider 10 days of November also. So how many days do I have? Okay, let us see. 10 days of November. Okay, next 31 days of December, 31 days of January, 28 days of February and 31 days of March. So how is it? How much is it? 1, 3, 3, 6, 9, 10, 11. So how many days do I have? I have 111 days. So I am using the asset not for 365 days. I am using the asset only for 111 days. So if I'm using the asset only for 111 days, I am satisfying this condition. I am using the asset for less than 180 days. So if I'm using the asset for less than 180 days, whatever is the depreciation rate on that particular machinery, only 50% will be applicable. In other words, let us suppose I have purchased this particular machinery and yearly depreciation on this particular machinery is going to be 20%. Yearly depreciation is 20%. But here I am using the asset only for less than 180 days. In other words, I am using the asset only for 111 days. What's going to happen? I will not be eligible to claim full 20% depreciation, but I will be able to claim only 10% of it, because it says 50% of the eligible rate. My eligible rate is 20%. 50% of that, that means I can claim depreciation of only 10%. That is the meaning of it. Any doubts in understanding this part? Any doubts in understanding this part?
So,
Yes.
send above 180 days full depreciation.
Yes. If I have used the asset for 181 days, then I'll be eligible for full 20% depreciation. Getting it?
Yes, sir.
Yeah. Any other doubts? Yeah, we have a problem. I think we'll solve this problem in the next class because I have only 6 minutes left. Okay, we'll solve this problem in the next class. Okay. Uh, yeah, we'll solve this problem in the next class because I cannot complete this problem in this particular class itself. It takes a lot of time. Okay, and after that we have to understand what do you mean by additional depreciation. Then we have something called as this is a problem on additional depreciation. Then we have unabsorbed depreciation. There's a problem on unabsorbed depreciation, and then we have terminal depreciation. Okay, so all these things we'll study in the next class. Clear? As of now, understand one thing, that depreciation is a very important concept. You have to understand depreciation thoroughly well. If you don't understand depreciation, then it becomes very, very difficult. Yeah. The reason is 10 marks are at stake when it comes to problems on depreciation. Clear? So what I will do is I will stop the class now. If you have any difficulties, if you have any doubts, please ask me right now. Let it be the worst question that can ever come, but clear off the doubts. Okay. And one more thing, income from business and profession is a very vast and very exhaustive unit. Clear? We'll have to spend a lot of time. In fact, the slides itself, the slides that I have, the slides itself are around 85 slides only for business and income from business and profession. And these are excluding problems. Excluding problems and excluding solution, we have around 85 to 86 slides. So if I include problems and solution, it will easily cross 120 slides. So you can understand the magnitude of this particular unit. Because as I said, we have to look for a proprietorship type of a business. We have to look for a partnership type of a business. We also have to look for a company related business, which is a private limited company, and also a public limited company, right? So these are the different heads that we have to see as far as income from business is concerned. And when we do that income from business, then we have to come to profession. Okay. Now when it comes to income from profession, okay, as I said, a business person will always prepare a profit and loss account. A professional will always prepare an income and expenditure account. So whatever are the incomes and whatever are the expenditures of that particular individual is what we have to estimate. Clear? So these are the things that have to be taken into consideration when it comes to income from business and profession. That is the reason this particular unit or this particular module is very, very exhaustive. At the same time, as I told you, you can expect around 30 marks. Only, not only, big number, 30 marks only from this unit. So you can understand the importance of this particular unit. So therefore, I don't want you to miss any classes. At the same time, even after attending classes, if you have any doubts, please raise doubts and clarify. Okay. It might so happen because of online classes, I might have missed out something, right? Which normally does not happen when I'm teaching physically, because I have the blackboard, I have the slides, I have the reference books, everything to explain, right? And you discuss amongst yourself in the class, but right now that is not possible. So even if you have the worst doubt, or if you think that is the most silly doubt to be asked, please ask it, because like you, there might be many other people who are also thinking on the same lines. So please ask doubts, get your doubts clarified, because unless you get your doubts clarified, your thought process will not be clear to go ahead. Clear? So I give you 2 minutes time, think about it, and then tell me if you have any doubts up to this particular point. I just flip through the slides so that if you have anything, you can clarify it. No doubts with you? No doubts for this? I want everyone to come in the video mode, please. Yeah, no doubts. I'm surprising that you're not having any doubts. This is a model, generally people have a lot of doubts. So honestly tell me, are you able to understand what I'm trying to tell you? Are you able to get certain aspects? I know in one go it is not easy to get everything. But are you able to understand what I'm teaching you? Yeah, are you able to understand what I'm teaching you?
Yes, sir.
Okay. Nobody has any doubts? See, why I'm stressing, I'm not forcing you to raise doubts, but if you have it, you clarify it. The reason being, uh, as when we come to the problem part of it, things are going to be a bit complicated because you don't get simple problems in income from business and profession. You get very complicated problems. Okay, and I'll show you one demo of the problem, then you'll understand what is it. That's the reason I'm clarifying this particular doubt. Okay, if you don't have it, well and good. I will circulate the notes of income from business and profession today itself. It will be a PDF format. Okay, and then you can go through that particular notes itself. Of course, the slides are also there, but I will be circulating the notes also. Clear? So I'll just take the attendance. Please come on the video mode.